So billionaire fund manager Paul Tudor Jones reported that he put part of his assets into Bitcoin. Let's find out how much and also his thoughts on Bitcoin. How's it going, everyone? It's John at RealJohnDoe with Currency.com. So in this video, we'll be having a look at the Paul Tudor Jones interview regarding his investment in Bitcoin. And if you haven't already, hit the like button, subscribe to our channel if you want to see more videos just like this. So if you don't know already, billionaire fund manager Paul Tudor Jones reported that he's made an investment in Bitcoin. This was announced around the Bitcoin halving and it caught a lot of attention. He compared it to gold and said that we may be witnessing the birth of a store of value. And for those of you who don't know, Paul is one of the most successful fund managers in the world with a net worth of approximately $5.1 billion. We're going to jump in, I'm going to play the interview and I'll break it down as we go. So Paul has been skeptic about Bitcoin and cryptocurrencies for a while now. The first thing that they asked him now is what made him change his mind. Here's his response.
Long time you were a skeptic of Bitcoin and some cryptocurrencies, but you recently appear to have changed your mind about that. What happened?
Well, COVID happened and the great monetary inflation happened, and that made me begin to think about how do you want to be positioned in your portfolio going forward. So that's really what tripped my interest in Bitcoin.
What he's saying, with everything that's happening with COVID-19 and the effect on the economy, it made him want to position his portfolio for when something like this happens again, or if it happens again, or however this continues to happen. You'll have an investment into Bitcoin as a hedge since it's starting to prove itself as a store of value.
You have to realize, if you just think about, say, Bitcoin versus cash, right? Bitcoin, when I think of stores of value, I think of it four ways: purchasing power, trustworthiness, liquidity, and portability. That's kind of the categories I put it in. So when it comes to trustworthiness, Bitcoin's 11 years old. There's very little trust in it. We're watching the birthing of a store of value, and whether that succeeds or not, only time will tell. Yeah. What I do know is that every day that goes by and Bitcoin survives, the trust in it will go up.
So right there, that's a very good point. Yeah, Bitcoin is only about 11 years old now. There's very little trust still in it compared to gold that's been around for thousands of years. Only time will tell really if Bitcoin can build the same level of trust as gold to be a store of value.
And you think about it from a purchasing power standpoint. If you own cash in the world today, you know your central bank has an avowed goal of depreciating its value 2% per year. So you have, in essence, a wasting asset in your hands. So Bitcoin, I think it's a great speculation. I've got...
Comparing Bitcoin to cash, what he's saying there is that because of inflation, when you hold cash, you can lose about 2% of purchasing power a year. Technically, you're holding an asset that depreciates. But with Bitcoin, the opposite has been happening for the past 11 years. Up next here is one of the highlights that he mentions how much of his assets he actually has in Bitcoin.
Something between 1 and, I think, just over 1% of my assets in Bitcoin. Maybe it's almost 2. That seems like the right number right now. It's not, for me, it's not the greatest. It's not the great cure for all the monetary ills, et cetera. It's a great speculation. That's what I would say Bitcoin is.
Yeah, so there you have it right there. He just mentioned he has about 1 to 2% of his assets in Bitcoin. If you go based on his estimated net worth of about $5 billion, I'm not sure what his assets he's referring to, but that would still be about $50 to $100 million invested into Bitcoin. He does say it's a great speculation. To speculate on that much money, that is a lot of money. So Paul's now asked what he thinks the benefits are of things being done virtual, like how we've been doing things the past few months, and if Bitcoin will benefit from situations like this later in the future. And he's also asked a little bit about gold, if is invested in that.
Anything that can be done virtually has had great success, whether it be Zoom or any of the big tech companies in the Valley, because we're all able to do that virtually. Is that the way you see Bitcoin? And separately, do you own gold? I was going to ask at the same time.
I have assets in gold also. I think gold can go substantially higher. And yes, the digitization of the world clearly benefits Bitcoin. I mean, what we wouldn't even be talking about Bitcoin if we weren't seeing first cousins like Venmo and a variety of other ways. My children don't even carry cash. They barely even know what cash is. So we're clearly digitizing the global economies. You've seen some countries do it explicitly, like India. You're seeing other countries on the way to do it, like China. So we're getting in an increasingly digitized world, and Bitcoin will be that much more accessible by that universe of people that could own it as a store of value. When you think about every bull market.
So one quick thing to point here, he mentioned that his kids don't carry cash. And when you think about it, which direction countries and technology is going to in the future right now, when it comes to money, it's all going digital. So this opens up a whole new bridge and generation going into digital currencies like Bitcoin.
The bull market has one common thread, an ever expanding universe of people who own it. So there's probably, the estimates are between 55 and 70 million people own Bitcoin. We really, if you're buying Bitcoin, your bet is that number is going to go to 120 million or to 200 million. And it's kind of hard when you look around and you see that the world's becoming increasingly digitized, not to think that.
With the Bitcoin halving that just happened, something that relates to what he just said, if you're buying Bitcoin right now, so what you want is for more people to buy it. With the halving, supply becomes less accessible. As time goes on, if people are looking to buy Bitcoin, the supply cannot inflate, and then the price will go up.
The preponderance evidence at this point in time doesn't point in that direction. But again, when I think of Bitcoin, I look at it as one tiny part of a portfolio. It may end up being the best performer of all of them. I kind of think it might be, but I'm very conservative. I'm going to keep a tiny percent of my assets in it, and that's it. It has not stood the test of time, for instance, the way that gold has, which has been a store of value for 2,500 years.
So what he said there in the end, gold has been around for over 2,500 years and is a proven store of value, and people trust it as that. So as the world becomes more evolved and we become more digital, gold is physical, and Bitcoin is the front runner for being the digital gold. So let's say Bitcoin does prove itself as a store of value, and in the next 10 to 20 years, and more adoption comes, supply becomes less accessible, less available, and the dollar continues to inflate, then one Bitcoin can raise anywhere between $100,000 to $1 million or even higher than that. So with more institutional and fund managers getting into Bitcoin, things are looking very bullish in the long term, but it will take a long time for them to build the trust in it as a store of value. One quick thing before we go, if you enjoyed the video, hit the like button. It helps us know what videos to keep going. Thanks for watching. It's John at Real John Doe with Currency.com. For more trading videos just like this, please subscribe to our channel.